So let's talk a little bit, if we're evaluating, how does this green tank work? And I think it's so important that we begin to understand that. And when we begin to understand that, let me go ahead and I'm going to look at an illustration here that we can do. It's called Strategies for Savings. And when I look at the strategies for savings and I go through, and we've already talked about this component, but I want to talk about the benefits that are available. When I'm looking at a savings account, and I'm going to put all the benefits up here on the YouTube channel, but I want to talk them through. Because many times people will say, well, you know what I'm going to do? I'm going to put money in the market. And that way when the market does really good, I'm going to be able to tap into the growth. Okay, I like your thinking. And then they say, but the rest of my money I'm either going to keep in my mattress or I'm going to keep at the bank. Okay, so the bank gives you point nothing, and even if it promises to compound your point nothing, what do you really get from an institution that just had to put their own money to build the building and then takes everybody else's money in, and then they loan it to other people and they make money on it and give you very little interest? Something to think about. So is the bank really the best place to have a savings account for your large amount of savings? Because if it's not keeping up with the cost of living, how is it going to create that income for you when you're in retirement? And that's why I believe this criteria that you see right here, these 12 areas, are crucial when you're looking for what do I need in creating a savings account. So we want to have a savings account that has tax-deferred growth, meaning I'm going to put money in it, it's going to make money, and I don't have to worry about paying taxes on it. Okay, we experience that a lot of times in an IRA or 401k, right? You put money in it, it hopefully grows, and when it does, you don't have to pay taxes on it until when? Well, you take it out. Well, with a green tank, with a properly structured green tank, this savings account, we want to be able to not only put the money in and let it grow tax deferred, we want to take it out tax free. In other words, I'll pay my taxes now. I'll get my paycheck. After I got my paycheck, which already took out my taxes, my money's sitting in my checking account, I'm going to say, Crystal, I'm going to call you at Crystal Clear Finances. I'm going to say, how do I make one of these green tanks so I can now put my money in it, let it grow tax-free, and then take it out tax-free? And we would show you how. The other thing that we're looking at, and these are just criteria, you can go talk to your financial advisor about it. You're welcome to give us a call at 518-433-7181. We'd be happy to help you. But the other thing you want is a competitive return. Now, here's the kicker on that. When it comes to competitive returns, a lot of times people think, well, I should be getting 10% in it. Okay, relax, take a deep breath, and refocus. We're talking about a savings account, not an investment account, but a consistent savings account that will give us a guaranteed, and you're not usually allowed to say that word, but guaranteed based upon the strength of the company savings account that will allow that money to grow. That's what we want to make sure we have. And in those type of account, competitive, 3%. How many of you, you'd like 3% in your savings? How many would like to have up to 5% in your savings? Yeah, that would help a lot when we go to the store and buy our $4 a dozen eggs. It would help a lot when we go buy our bread, wouldn't it? And that's why our savings account needs to be positioned properly. When we get overwhelmed with everything that's happened in life, we get sloppy and we make decisions that are reactionary and they don't help us. Now more than ever, your savings needs to be working as hard as you do. And that's why we need to put these in place. So you want to, in my opinion, we help our clients put in tax-deferred growth. We want them to take it out tax-free. We want a competitive return. We want them to be able to put in as much as they want to. You know, you think about a Roth. They let you put in, if you're 50 or over, they let you put in a Roth $7,000 a year. Hoo-hoo. Yeah, so we're going to retire tomorrow on that. We have to understand that we've got to have larger amount of resources. Now, there is a way to deal with that. We can do IRA conversions that go over into the Roth. A lot of people are looking at that option right now because with their IRA account being down, they roll over the same number of shares. Those shares are worth less, right? Because the market's down. This is a good thing temporarily. They pay taxes on the smaller amount because it's worth less. And then hopefully the market recovers and then the shares build right back up and they were able to take it from a tax-deferred bucket into a tax-free or tax-advantage bucket. That's a good tip right there. But those are things that you begin looking at, and you want to be able to, getting back to what we were discussing, the ability to make high contributions into your savings account. Now, a couple other areas when you're looking at savings, and I'm not going to go through all 12 of these, but we want to make sure that it's safe. You know, why we use the yellow tank, the investments, the stock market, we all know that it's not safe. When people say, oh, I'm saving for retirement, and I said, oh, how are you saving? What green tank of savings are you using? They're like, oh, I put it in this fund or that stock. I'm like, whoa, whoa, whoa. You are not saving when you put it in the stock market. You are investing when you put it in the stock market. You are saving when you put it in the green tank. So I want to make sure we clear up that language on that so that we don't have a misunderstanding, because when you quote unquote save in the market, it is not a safe place. Hence why we always say it's the yellow tank where you use caution. It's not red like stop, don't go in it. We want you to go into the market. We want you to be able to be positioned for growth, but we want you to do it when you've already have your safe money in place so that you can afford to lose it. Now, in 25 years, have I seen someone lose absolutely everything in the market? I haven't. That doesn't mean that it can't be done. Doesn't mean anything except for understand there is risk in the market and we want to have savings outside of it. Now, the other potential that we want in here before we moved on to the next slide is we want to have liquidity, use, and control. Now, you might say, well, Crystal, of course you'd have liquidity, use, and control whenever you have money in the savings. Have you thought about a CD? Those are at the bank, and that's a form of savings. Do you have liquidity, use, and control on that? I don't think so. Now, I will dispel a myth that people are like, oh, I can't break my CD because I'll lose. Well, what you will lose is that huge 0.0% interest that they usually give. Now, to be fair, I think it's up. Some of them are up to 2%. I think there was a CD I saw the other day at 3%, which is good compared to where we were a couple years ago. But what they're doing in exchange to give you that 3% is they're saying you can't touch this money. Though if you break it, usually what happens is you just give up whatever interest. But again, you'd want to check to see what the regulations are with the bank that you're using with your CD. But the point of it is, the reason why we make the green tank, right? The reason why we have the savings is so it can be safe. You can touch it when the market's down. If you're locking it up and the market's down, where are you getting the cash flow if you're in retirement? If you're not in retirement, that's not the issue there. But in retirement, many people need an income stream. Having both buckets where you can say, or both tanks, so that you can literally say, okay, I'm going to take money from the investments when they're up and the savings when it's down, is critical. So there are several other areas that we could go over when it comes to characteristics, but these are the main ones. You want to make sure you're able to touch your money. It's keeping up with the cost of living. It's growing tax-free. You can take it out tax-free. It's got a competitive return. You can put as much money in it, and you also have collateral capacity.